We're good to start, KD.
Good afternoon, everyone. Hope you're well, and welcome to Australia's Farmland Values Mid-Year Update with the team here at Bendigo Bank and Rural Bank. It's also so wonderful that we've been able to coincide this with National Agriculture Day. So for those of you that don't know me, I'm Catherine Davies. I'm the General Manager of Agribusiness here at Bendigo Bank, and I've got the real pleasure of being your host today. Most people know me as KD as well, my initials, so please, if the gents slip up and call me that, it is one and the same person. I'd like to begin today by acknowledging the traditional custodians of the many lands in which we're gathered on. Specifically, I would respectfully acknowledge the Wurundjeri people of the Kulin Nation. They are the traditional owners of the land that I'm seated on today here in Bendigo Bank's office in Docklands in Melbourne. I would also like to acknowledge the traditional custodians of the land in which each of you are living, learning and working from. I particularly pay my respects to the elders, the past, present, and extend my respect to any Aboriginal and Torres Strait Island people that are here with us today. Thank you. I would also like to give you an audio description of myself. I'm a female with fair complexion and long brown hair. Today I'm wearing one of our agribusiness white button-up cotton shirts, and I'm seated in a meeting room. I do have a Bendigo Bank burgundy background behind me as well. Look, and while we're here, it would be remiss not to acknowledge that today is National Agriculture Day and the theme of Grow You Good Thing. I think it ties in nicely with agriculture and what our land prices have done historically and where they're going. But the National Agriculture Day is really our chance to celebrate and learn about, the incredible sector that is agriculture in Australia. It is such an awesome opportunity every year to just pause and celebrate every single piece of the industry and how it plays out into our world day in, day out. But before we begin with the farmland values discussion, just a little bit of housekeeping. So there will be absolute opportunity for you to ask questions. We are keen to engage with you. There is a Q&A function at the top of your screen there. So please pop your questions in there and we will work through those as we go. A lot of those questions we will place towards the end just so that we get good flow, but absolutely keen to hear your questions. So if we think about the mid-year outlook for 2024, it really provides us some insights that are focused on the second half of 2024, but the report also details the key driving forces that are affecting our agricultural markets. And despite the mixed seasonal conditions that we're seeing around so much of Australia, it's a broadly positive outlook through to as a result of that strong export demand that we're seeing and the favourable price forecasts, and in some places even the improving seasonal conditions. So I'm joined on screen today with the lovely John Droppett, who is our Head of Insights and Government Services. For that amazing title, John gets to lead a team that delivers market insights across a wide range of agricultural commodities. He also gets to support some decisions that we make in terms of how we engage with our commercial partners, our customers and our bank staff, and really build that into our day-to-day operations. John previously led the Economics Data and Insights team at Dairy Australia and has the deep experience in agri-banking, corporate dairy and farm contracting. John was raised on a dairy farm in Gippsland, and we know all good things come through Gippsland, John, so great to have you on board.
Thanks very much, Catherine.
We've also got Neil Burgess on the call today, and Neil is our Senior Manager of Industry Affairs here at the bank. Neil is a seasoned agriculture and agribusiness finance professional with nearly 40 years experience. You wouldn't think it. He's looking very young today, definitely not 40, but it includes both theoretical and practical activities across Australia and New Zealand, with a working history that covers trade, commodity finance, commodity analysis, agri-economics, agribusiness lending. He's really done also some deep research into horticulture, winemaking and viticulture. These activities have been executed through investment banks right through to unlisted public companies. So to support the extensive experience and qualifications that are held in banking and business management, Neil also has that deep experience in viticulture and oncology. Neil is currently employed with us as the Senior Manager. So welcome, Neil.
Thank you, Catherine.
So before we jump into the results of the 2024 mid-year Farmland Values Report, we might really quickly touch on some of those underlying drivers that we're seeing in the Australian farmland prices. So could you give us a little bit of an idea? What are you seeing? What are those drivers and how have they been impacting our farmland values in recent years, Neil?
Thanks, Catherine. Look, the real key drivers sort of underpinning the market. I mean, we look at seasonal conditions, commodity prices, and of course, interest rates. So the combination of these three together actually has a significant influence on both buying and selling decisions. Now, also the supply of land, which comes onto the market is another key factor. And up until the last 18 months, it was quite clear that the demand for agricultural land was certainly outstripping supply. And we had consecutive years of widespread above average rainfall, we had strong commodity prices, and of course, we had record low interest rates. Now we're actually seeing, more balance in the supply and demand picture as those drivers, of the farmland values become more mixed across the different regions and across the different states. Now we're also seeing the change really led by interest rates, which started to rise sharply in, 2022, 2023. We've also seen a real shift back into sort of drier conditions and lower commodity prices. And while the supply has also become a little bit more restricted. So, this shift in drivers, has really led to, the growth in farmland values starting to slow. And if we're looking at 2024 specifically, we have seen a really mixed bag of seasonal conditions and commodity prices across Australia. And while the lack of any real interest rate relief continues to weigh on demand, this is all resulting that, we've certainly shifted out of that demand exceeding supply and leading more to, farmland value sort of growth and value plateauing.
Neil, if you don't mind, I'd love to dig just that little bit deeper into these four drivers. Specifically in 2024, the seasonal conditions, they've developed quite remarkably and quite differently around the nation. So what kind of impact has this had on land values?
Well, certainly we've seen in the first half of 2024, that mixed rainfall pattern across the country. If we look specifically, New South Wales and Queensland saw mostly favourable rainfall patterns. And this has led to, much improved conditions for the livestock producers, and it provided a really good start for the winter crop programs. Then we look at, sort of Southwest Victoria, South Australia, Tasmania, and parts of the Western Australian wheat belt. They experienced sort of, overly dry conditions in the first half of the year. So, for areas to experience these dry conditions, we saw, dry sowing of winter crops. This has led to reduced feed for livestock, and in some of these areas, we've estimated that, over 50% of the national sheep flock was in areas with below average rainfall. Now, no doubt this has actually, impacted on buyer sentiment, particularly in these regions, over the first 6 months of the year. Now, if we move in a little bit sort of forward, looking at July and August, these were better months, for Southern Australia. And we saw some relief, coming sort of, ahead of spring. So it will really be interesting to see how these improved conditions really translate into the second half of the year from a farmland values performance. And the variance in seasonal conditions across, versus Northern Australia versus the southern states means that the northern farmers were in a much better position to continue sort of considering land purchase in the first half of the year. And that fueled some continued growth in land values, and hence that's why we saw the quite the difference between the states. And again, while in the southern states, confidence to invest in land because of the tougher seasonal conditions has really sort of eroded the appetite for land purchases.
Thanks, Neil. The The corresponding piece to that around commodity prices, you mentioned that there. So how have those prices moved across the ag sector and in turn affecting land prices?
Well, the commodity story can be told really by sort of grouping the prices of major ag commodities sort of into an index. And you can actually see on the slide here. Now, the plum coloured line is all the agricultural commodities together, and they're weighted by their value of production. We've got the orange line, which shows livestock prices, and that includes, beef cattle, lamb, mutton, and it includes wool as well. And the red line shows the crop prices, which includes wheat, barley, and canola. And all these prices have been indexed to the average of the 2010 to 2015 years. Now, commodity prices have held relatively stable this year, with the price index of all commodities sitting about 2.8% higher on a year-on-year basis as at August. So, they've seen some recovery from the last year, but they're still well below the peaks that we saw in, 2021, 2022. Now, what we have been seeing is that there's been a diverging trend between sort of livestock and crop prices. The livestock price index sat 23% higher on a year-on-year basis in August, and while the crop price index was down 13%. And the falls observed in value across most cereals and the canola markets was the resulting from some pretty large northern hemisphere crops. And this weighed on the sentiment around Australian production of farmland. However, if you look on the flip side of the coin, that recovery in livestock prices, saw confidence in the sector restored, after a particularly challenging 2023. So the confidence is starting getting back to some really good levels. And while this hasn't necessarily resulted into full confidence and profitability to see buyers sort of surge back into the market, the better seasonal conditions, across those northern states has certainly helped the movement into, improved medium farmland prices.
Mm. And Neil, look, the other driving factor there is interest rates. And look, we all know, we're all watching very eagerly, but we have not seen any changes in the official cash rate in 2024. What impact do you think that's had on land value?
Well, interest rates been unchanged at 4.35% since November last year. I mean, it's really acted as a handbrake on the demand for farmland. And this has had, added to the headwinds from, the tougher seasonal conditions, and, the volatile commodity prices. And it has really slowed the appetite, from a purchasing perspective. I mean, we'd seen demand resilient to those initial rate rises, in 2022. But once it really started to close in around that 4% level, in 2023, demand really looked to slow. And that has certainly been the case through, the first half of 2024. When you combine those thinner margins, the tougher seasonal conditions, and that more varied, commodity price movement, it really has, resulted in farmers sort of sitting on their hands when it comes to, new purchases.
Mm. Thanks, Neil. And look, John, given these underlying drivers that we've just discussed, what is the data then telling us in terms of Aussie farmland values? How are they performing from a national perspective in the first half of 24?
Yeah, well, thanks, Catherine. The standout trend essentially in terms of half-on-half growth is that there is no national trend in the sense that it's a real mixed bag of some regions where we're seeing significant growth, some with stability and some with declines. And that really reflects what Neil was just talking about there in the variety of seasonal conditions, the variety of commodity price trends around different parts of the country, and that particular dichotomy between livestock prices recovering after, again, a shocker in 2023. Ask me how I know about that. But cropping prices being generally lower. And so if we look at the median price overall, in terms of half-on-half growth, it was about 0.4% change, compared with the last half of 2023. So again, fairly stable on average. Year on year, we're still seeing growth of about 11.4%. And as a caveat, really, when you're looking at farmland transactions in half-yearly periods, which we break it down on this chart here, the year-on-year growth in some ways provides the better representation because farmland value sales are actually follow something of a seasonal pattern in terms of where those sales are happening throughout the year and the distribution of them. So do keep in mind that difference between year-on-year and half-on-half growth. So we're still seeing growth if you look at compared to last year, but it's certainly slowing down after those really strong couple of years back, particularly 2021, 2022. And the chart in the longer term shows that pretty clear trend as well. We've seen a doubling of the median in the last 5 years and a tripling over the last 9 years. So we've seen a strong long-term trend, but we are starting to see signs of plateauing at the moment, and it's likely that we're going to enter a period where values are following more of a plateau pattern.
And John, one of the drivers that was mentioned in that in the report is actually just the supply of farmland continuing to tighten. What do you think's driven this decline or tightening?
Well, it's absolutely right. I mean, we've seen a real fall in the number of farmland transactions, and it's pretty clear on the chart there. But hit a new record low in every state and region, apart from South Australia, in the most recent half. 2,900 transactions versus I think a bit over 5,000 back in 2021. So nearly down by half. There's a couple of reasons for this. Again, we've come off a very strong period of increasing prices, but while we've seen some more challenging conditions in certain areas over the last 6 to 12 months, a lot of farmers are coming off a fairly strong period in terms of seasonal conditions, in terms of prices, and so they do have that financial buffer. And we haven't seen this kind of more recent challenges leading to an immediate need to sell farmland. For example, we're not seeing the number of distressed sellers or even real forced consolidations that you might have seen in other phases. That being said, the last 6 to 12 months, we have seen a few more properties listed, more by choice though, people choosing to get out of farming after a strong period, looking to reduce debt as interest rates have started to increase, for example, or they're scaling down their businesses. But the demand side's really sort of slowed down and effectively counterbalanced that. We're seeing this tension between buyers not being particularly active, but also sellers, and their price expectations in some cases might not be matched by where buyers are prepared to transact. So there's a little bit of a standoff in terms of transactions, and I think that's helped to contribute to this as well.
Balance it out just that little bit. So if we take that that national perspective and jump in a little bit deeper, I'd love to do a bit of a state whip around. Let's see what's going on around the country, state by state. So which states have been the strongest growth trends in the first half of 24?
Yeah, as I said, we've seen year-on-year growth across all states. But if you look at it from a half-on-half perspective, you start to see the different trends around the country, and this chart really pops those out. So we'll sort of, as you said, we'll whip around the country. In New South Wales and Queensland are the real standouts from a price point. We've seen some continued strong growth in those states. New South Wales has increased at a pretty consistent rate of 5 or 10% per half, right back to 2021 there, and hasn't seen a decrease actually since 2018. So year-on-year growth of 13%. So strong trends in New South Wales there, as you can see, and not too different in Queensland. I mean, Queensland had a little bit of a pause in second half of 2022 and the first half of 2023, but effectively we've seen that growth resume over the last two halves, and it's up 17% year on year. So fairly strong in both those states, and given the recovery, especially in livestock prices and generally favourable conditions through the first half of this calendar year, that's not a huge surprise. We move down sort of southwards towards Victoria. Victoria's really flattened out in the last 18 months. You've kind of been bouncing around there, as you can see on the chart. We saw a doubling from the first half of 2020 to the second half of 2022. But the last three sort of half periods have seen, again, that bouncing around, give or take 5% of, I think, around $15,000 a hectare, up 2% year on year. So not a huge trend at the moment. Tassie, similarly, a bit harder to characterise. The real challenge with looking at the data for Tassie is it's very regionally, very divergent within regions or by region within the state. So, overall, I think, the guys would say, well, go with the vibe a little bit. It's more flat overall, but again, there's some real sort of sub-regional variations within there.
And John, the other states we haven't touched, our good friends in WA and South Australia, how would you characterise those states based on the data?
That's right. Yeah, I'd hate to be accused of having an eastern state focus, even coming from the dairy industry. But both those states really saw their median prices hit record levels in the second half of 2023, and then they've dropped actually by the same amount, around 12%, in the first half of 2024. They both battled dry conditions in the first half of the year, and that's really slowed things down a bit in terms of median prices. But they've both seen year-on-year growth, so there's still some underlying growth trend there. Look at WA in particular, we've again got a half-on-half decline, but the median is still climbing, and compared to last year, and that median has tripled since the first half of 2019. So again, some pretty solid growth there over the medium term. South Australia, more stable recently, give or take 3% of around 7,500 a hectare. But a bit of an exception there in the second half of 2023. So a real mixed bag, but again some parallels you can draw across the different states.
Oh, absolutely. And just given that those states are so big, if we zoomed in just a little bit, is there any call-outs that you'd make about particular regions, or what have we seen at a regional level?
Yes, again, it's a really mixed bag across the regions, and again, the more localized you get, obviously, the more you're impacted by at those local factors. But if you take a broad brush across all the regions, you'd say about 40% have seen prices increase, about 40% decrease, and about 20% stable. And that sounds like a very vague statement, but if you compare that to, say, 2 years ago, we were looking at 3/4 of regions were growing, and only 5% decreasing. So that overall trend has really shifted in favour of more of a plateau. If we did pick out a few highlights, southeast, south coastal Queensland, York and Mid-North Peninsulas, and also in central west in New South Wales, I've seen some of the bigger growth, especially looking at farmland performance, which is what we're here to talk about. Meanwhile, if you look at southern Tassie, southwest Vic, Murray and Mallee in South Australia in particular, you've seen those consecutive half-yearly declines. So there's obviously different regions at different points on the chart there. And the report, I should say, we've got a pretty extensive report that we're talking about here today, and to look at a particular region and especially your particular region, it's worth digging out the report too and having a look across the tables more directly.
I couldn't agree more. There's some brilliant insights in there, John. So, just thinking, that's been a really good looking back. I think it's really important that we look forward as well. So, thinking about those key drivers, the interest rates, the seasonal conditions, the commodity prices, what are we expecting to develop into 2025, and what's actually this doing to our market sentiment around farmland value?
Well, this is where it gets, excuse me. This is where the crystal ball gets a little bit murky. I mean, because it's always really difficult to sort of to first, predict the long-term weather conditions. But on the whole, the rainfall outlook for Australia is starting to look a little more optimistic. The thought, having said that, the prospect of a La Nina event forming is becoming less likely. The Bureau of Meteorology models suggest that the surface sea temperatures are likely to remain within those sort of neutral thresholds. But saying that, regardless of the likelihood of a La Nina event, the chances of above, median rainfall sits above the average across most of the East Coast. And it looks like New South Wales is currently on track to see really, some really favourable rainfall totals. Now, if we're looking at sort of the commodity price outlook, again, this is a real mixed bag for commodity prices. Though broadly speaking, things do become a little more positive, once we move into 2025 and the harvest finishes up. Cattle prices are expected to see some support and will continue to support the livestock price index, and to keep it on that upward trend, albeit at a slower pace than we have seen in the first half of this year. In addition, look, dairy farmers are navigating sort of reduced margins with lower milk prices. But looking at forward, we are seeing some sort of potential benefits on the horizon there, particularly in the export space. And crop prices, look, they are likely to soften a little under the harvest pressures, though there is the potential for that resurgent export demand, particularly from China and some other markets, particularly in early 2025. And this should provide potentially some upside for prices in that first quarter of 2025. So while there is a definitive lack of upside for prices on the short-term horizon, that there is potential there to see improvements as we move into the early part of 2025, and that should hopefully prove favorable. Now, if we look at the final one, the interest rate outlook, it's looking most likely that the interest rate cuts that we've been hoping for will begin sort of early 2025, even though we've seen some of the the economies in Europe and the US started their easing cycle already, but of course their interest rates rose earlier than Australia's. So it really all depends on Australia's economic indicators, and obviously it's not looking as though they've shifted, into the target range. Well, certainly not, for the early November meeting where they remained, stable. But, even in early December, we're picking that, they won't have moved far enough. Now, any level of interest rate cuts clearly would benefit farmland demand. But a rate cut in 2025, the demand is not likely to happen, that quickly, and I don't think it will actually you won't see that renewed surge, if interest rates start to fall. Look, it will certainly help to take the pressure off farmers with high debt levels, certainly leading to lower interest expenses, and potentially this is going to relieve some of those pressures, from some primary producers that are being forced to sell. So hopefully it should act as a bit of a pressure release valve.
Thanks, Neil. Just a reminder to our audience, question and answer. Please pop something in the chat if you are keen to hear something more. But question again from me, Neil. So what kind of impacts are these shifts expected to have on the market sentiment? I think, as we head into 2025, goodness me, how might these shifts, really change the land values more broadly?
Well, the market sentiment at this moment in time is still mixed, as buyers and sellers aren't really aligned. Properties are taking longer to transact, and often at lower prices than sellers were initially asking for. With the exception of a few regions, we've definitely shifted out of that strong growth phase, which we'd seen for a few years. And it's we're into a period of sort of price stabilizing, while those drivers are expected to shift towards, a more positive stance. These changes are really unlikely to be of the magnitude, to cause that significant uplift in farmland values, at least in the first half of 2025. So from, a farmland value perspective, while there is some optimism, on the horizon, we're seeing, potentially with lower interest rates and improving seasonal conditions, it is unlikely, at least, sort of over the short term, over the next 6 months or so, that it will be enough to really sort of significant lift that buyer demand. But it should be enough, to bring some active buyers to provide some support. So I guess if we look at, a real national level, we're expecting a further plateauing of values, for, the remainder of 2024 and just moving into 2025. And with that holding pattern sort of set to continue. Having said that, the movement in value of farmland, may be varied, just based off, really mixed seasonal conditions that we're seeing across the country, since September. And of course, individual buyer motivations.
Yeah, great, Neil. Thank you. That yeah, there's some interesting factors in there to keep the market moving. As we take that step forward. We do have a question. We've got a question in from Tony Anderson, who's just asked, is there any significant activity in the institutional space? I don't know whether that one is for you, John, or maybe Neil.
I'm happy to have a crack at that, just based on what the guys have been saying. Certainly what it seems like we've seen in the last sort of 6-month period is that corporates have pulled back a little bit. Some of this as transactions have slowed down and values have plateaued, and obviously there's been some more uncertainty out there in the economy. I think that real sweet spot for farmland values transactions been in the larger family farm. So well-established businesses, obviously looking to scale and making those incremental investments. So obviously a very challenging time for young farmers in the last few years to get a foot in the market. And similarly, we've seen a bit of risk aversion from the institutional side of things. So obviously hard to generalise, but that would be the sort of trend that the guys have seen.
The key message, yeah. Thanks, John. Michael Blakeney's just asked the question around the data and the background to the data, but his question is: Does this information that we've heard from today reflect pastoral and broadacre or grain farms? Is there any insights into irrigated horticulture or those permanent crops? Might be you, Neil.
Yep. It's really hard to answer that based on the farmland data alone, because we aren't really able to discern sort of between the individual sort of crops. So the data we do get to a degree is aggregated. So unfortunately we're not able to get down into that individual granular level.
Industry by industry.
Yes.
Yeah. And that's probably a little bit indicative of digging into the regional areas. That will give you, the regional insights might provide a little bit more indicative information in there as opposed to an industry-based assessment. But thank you, Michael. We've also got Abraham here, who was wanting to know how will changes in international trade and US policy affect farmland values. Well, that's a fresh topic after last week's activity in the US. Any thoughts there, gents?
I think one of we obviously don't comment on geopolitical issues, but saying that, I think it's going to be a very interesting first 12 months. I think one of the things that we can probably guarantee on is some, unpredictability. And until we actually see, a direction which, the US is taking, then we will be able to make, better, informed decisions on where, global markets are actually going to go. But at this point in time, it's just a holding pattern for us.
And I'd echo what Neil's just said. I mean, the consistent, or the thing, ironically, that we can most confidently predict is uncertainty and risk, and we've sort of seen that before around US policy per the question, the global economy in general, and the way things have been shaping up the last few years. So I think any of those risk factors obviously make any number of markets and major players in them more risk averse, and I think that's probably the point that we'd start with any of our analysis.
Thanks, John. And while I've got you, just thinking about the number of farmland transactions that have taken place, and just that the experience we've seen looking back. But if we think about looking forward, are we expecting that to rebound in coming months, or do you think that tighter pool of availability is going to be a bit more of the norm?
I think we're going to see a little bit more of this sort of standoff almost between buyers and sellers, and again, that's a very generalised view across the country. But I think we've seen a period where prices have really strongly risen. Seller expectations have obviously followed that trend up, and now the trend stopped rising. So I think at the same time we've seen this uncertainty creeping in, and a bit more risk aversion from buyers, or whether it's interest rates that are slowing up their ability to purchase. So I think that probably gap between expectations is likely to stick around for a while, and that's certainly what some of the anecdotal evidence we're hearing is as well. And of course, there's some regions again that have been impacted by dry conditions, and there's a chance there that obviously that leads to a bit of an uptick in selling if it persists and farmers come under pressure to consolidate. But we really haven't seen anything to kind of back that up on any kind of scale at the moment, and certainly wouldn't be hoping for those conditions to continue, because it's not a good way for people to be motivated to change their businesses. So I think probably over the next 6 months, our expectation is that we're not going to see a huge rebound in transactions and in prices. But obviously everyone's going to adjust their expectations based on that. So we might start to see things move along a little bit after that.
Thanks, John. And this is a really pertinent question from Damien Walsh as well, just around green infrastructure affecting prices. And I know, from an ESG perspective, there is no one better than our primary producers and farmers for looking after their land and, having the custodianship of that. But, his question there around, is that green infrastructure affecting prices, like the wind turbines for cropping and livestock being run under the same land? Is there any insights there? Neil, maybe?
Go on, John.
I'm on a roll now. No, I think just, correct me if I'm wrong, Neil, but I mean, my view on it is from what I've seen in the data and the analysis is that it's still pretty early days to kind of draw conclusions like that, and a lot of those, kind of situation by situation sort of plays rather than looking across a broader trend. And I think it's probably something we do need to dig into a little bit more and maybe pull out some case studies, because the sort of data that we base this report on is probably pretty broad brush to be looking at those. But absolutely, in terms of a policy issue, it's kind of a real hot button one at the moment. So I think you'll probably expect to hear a little bit more about that.
Is there anything different or additional you'd like to add, Neil?
I mean, John makes a valid point. I mean, it's you've also got to look at the individual properties as well, which which do have this infrastructure on. There are a lot of other factors that need to be sort of taken into consideration. Which the quality of the property, whether there are any other capital improvements, access to its water, its location, etc. So I don't think we can probably just look at the one issue. I think we've got to take a much broader approach to it and look at the individual property, and I think there are other considerations that will affect its value.
Thanks, Neil. And look, while I've got you too, I'm very curious to sort of understand, where do we think that the primary buyer interest is coming from in Australia? So who's actually out there hunting for a property?
That's a very good question, Catherine. And like I say, I mean, the data that we have doesn't clearly identify, who the buyers are. But I think there's, the general rule of thumb that, if there are quality properties on the market, there will be, interested buyers, because, primary producers are always looking for, quality properties. I think it's, one of the things we look at, particularly with high interest rates, those, entities, etc., that are carrying high debt levels. I think they've, if they're still in the market for looking for acquisitions, have been very selective. But let's say it's difficult to sort of get down into, the individual, categories of who's actually buying, productive land.
Understood.
Well, I was going to say one thing I'd add to that. Obviously, we talked before about the challenges facing young farmers, and then some of the risk aversion around corporates. And sort of Damien's question and this one have sort of reminded me together. There's there is a little bit of interest or a little bit of an extra dynamic from some of these projects, such as the turbines or the solar farms. I mean, whilst our ability to analyse based on those existing on a property is still pretty early days, it has to be said that those, particularly the solar farms, for example, are adding an extra source of interest in the land. And so there are some regions where you've seen that increase. There might be one or two more buyers in the market just off the back of that new use essentially for land. So I think that's it's probably not of having a macro level impact, but certain regions and certain transactions that certainly makes a difference.
And John, Tony's just asked in the chat as well, the falling interest rates were slow to have an impact on agricultural investment intentions last time round. So thinking back to circa that 2019 period, what do you think is the strongest driver at the moment? Is it that season, the terms of trade, or is it, capital costs? What do you think's driving it?
That's a good question, and obviously, the kind of typical analyst answer is going to be that it varies by commodity, of course, Tony, as you well know. But certainly, if you're a beef farmer and you saw prices fall out of bed the way they did in 2023, that probably is the most significant thing that's affected you. And similarly, I think in dairy we've seen prices come off as well, but. Whereas if you're obviously in Southwest Victoria or into South Australia, there where it's pretty dry, that's going to be bringing about that risk aversion and really slowing up. So I think it is a wide range of factors, and it does probably vary again by industry. But if I had to pick one, I'd say it's probably that overall macroeconomic context. It's interest rates are going up. There's a bit of uncertainty out there. Is this a good time to be making a big investment? And I think that's probably that can be a consistent frame of mind across different industries. Strong commodity prices in your industry obviously are going to make a difference there. But if I had to pick one, it's probably that broader overall kind of level of uncertainty.
And Jason's just reached out to remind you, Neil, of a great update you gave some of his team this week around grapes, table grapes. He's just asking, not such a great output for the wine industry, but table grapes, looking pretty good. What was the news there you shared?
The table grapes have had a really good season this year, and they're expecting that their production will be about 230,000 tonnes. Now, quality is good, quality is excellent, and there's good supply. So the feeling is that the international markets, a large percentage of table grapes are exported. So it's anticipating that there's going to be some really renewed export demand for Australian table grapes, and with the increased production, we should actually see some really good quality supplies actually coming onto the domestic market as well. So great for the industry there.
Fantastic. And who doesn't love a great table grape? So that sounds fantastic. Thank you. Well, ladies and gentlemen, we don't have any other questions out there. So I would like to just take the opportunity to thank Neil and John. You've given us some really good insights in there, and, all reflected in our 2024 Farmland Values mid-year report. So for those of you that are on the call, I'd really encourage you to, to jump in and subscribe to our insights. There are some amazing opportunities in there for you to get monthly updates, to get the, the updates that come out on a half-yearly. But you also have the opportunity to subscribe to our podcast, so the Unpacking Ag podcast, and also to Beyond the Farm Gate podcast as well, where we do give regular updates and also tell some great stories about what is happening in the industry more broadly across our customer base and through our business partners. So I'll ask you to jump in and give any questions in there you really liked. So a thumbs up in the Q&A button, so we know next time what else we might want to dig deeper in there for you. But Neil and John, thank you again for your time. I think it's been a useful time. You're 45 minutes together. Time is precious, but when you're getting those great insights, it really helps us drive and make decisions for our business going forward. To our audience, for those of you that have joined us from all over Australia, I would love to just thank you for taking the time. Time is precious. You all have busy days. So we would love you to provide any feedback that you have through to your regional managers or your agribusiness relationship managers. If you need to subscribe, please use the QR code on the screen. That is the easiest way for you to jump in and find us and get your subscription. We're fortunate to use the insights that you've heard today and leverage the background and the products that our agribusiness specialists are able to bring you. So if anyone is out there looking for a financial solution for their farm, please reach out to one of the bankers in our regions. We have an awesome, enthusiastic group of people out there that are looking to look after you and ensure that your business is successful. So again, ladies and gentlemen, thank you so much. It's been wonderful to have you today. Have a wonderful National Ag Day, and I look forward to catching up with you all again soon. Thank you.